Hello everyone, I hope you're doing well. This is Cameron from Tactical Trading Services, and today we are going to go over a little bit of information regarding candlesticks. Candlesticks, they're a great thing to have in a trader's toolbox, and they will tell you a lot about other traders' emotional opinions of the underlying, and it'll help you make more informed decisions about a trade, in my opinion. When you know the signals that are put forth from certain candlesticks and their patterns, it can help you eliminate the typical emotion that traders without a trade plan will feel. So before we dive into it, I just want to say that risk disclaimer: futures and options trading have potentially substantial rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets. Don't trade with money you can't afford to lose. This group is neither a solicitation nor an offer to buy or sell futures, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses like those discussed in any material within this group. The past performance of any trading system or methodology is not necessarily indicative of future results. So now that we got that out of the way, let's talk a little bit about candle construction. Okay, so your candlesticks are constructed in such a manner that they give you four very key items that relate to the price action. Okay, and those items are going to be your high price, your low price, open, and close price. Okay, the upper wick will indicate the high price of the candle. And what I mean by the upper wick is this portion right here. Okay, this is your upper wick, how it sticks up. And the same thing over here on this bullish candlestick. That's your upper wick. Okay. If a candle does not have an upper wick, then the top of the real body will be its high. So what I mean by that is this right here is your real body. Okay, it's your body of the candle. And same thing over here. So if we don't have an upper wick, then the top of the real body is going to be your high, right? The lower wick will show the candle's low. So right here is your lower wick. Okay, it's your lower wick, and it will show the lowest price wherever it stops at. It will show the lowest price that that candle traded at. And we've already talked about the body a little bit, but so the top and the bottom of the body can either be the open or the close of that candle, depending on if it's an up or down candle. What I mean by up or down candle, I mean it's your typical green or red candles. Okay, so if like this one right here, this is a bearish candlestick. So what this is going to be indicative of is that the price opened up here, but it closed lower down here. Okay, same thing with the bullish candlestick. The price opened right here and pushed up and closed at an upper value. Okay, so candlesticks, they can help immensely by allowing you to identify possible reversal patterns, and that will help set you up for some highly reliable trades. Okay, these technicals regarding candlesticks and their patterns are clues, and they'll put probabilities in your favor, and that's an ultimate function of technical analysis. I know that I'll probably say this later on, but one thing I want everyone to be aware of before we dive too deep in this is that you always need to make sure that you're looking at these candlesticks in the right format and a lot of times it's good to wait for a confirmation candle on the next time frame, the next candle, depending whatever your time frame is. But yeah, wait for a confirmation candle. There's many different candle formations and patterns. In this lesson, I'll cover some of the most basic ones, along with a couple of my favorite ones to trade. And this, with anything else that involves trading, in technical analysis, nothing is ever 100% accurate. So a lot of times, like I just said, it's important to find some sort of follow through. Okay. And we kind of already went over this a little bit. It's kind of what I just said as far as the facts about candlesticks. They're a good tool to have, and they really help differentiate a trader who has no clue. So the first candlestick that we can talk about is called the spinning top. Okay. And the spinning top is ultimately a candle that signals indecision between the bulls and the bears. And the color, red or green, doesn't generally make too much of a difference. Okay? And a trader really needs to pay attention to this candle and the ones around it, because it can signal that a trend change is imminent. Okay? That doesn't mean that we are going to have a trend change, okay? But it means that there's a possibility a trend change could be coming up, so you need to watch the developments of the candles, okay? And most of the time, in regard to spinning tops, the next candle that forms after the spinning top will more than likely be in the direction of the spinning top's opening price. Okay, so that means most of the time, if this candle was to close, it would close green, right? So that means that the next candle would probably be green, and the same with this one, it would probably be red. Okay, so the spinning tops, they're definitely something that you need to take note of when you're watching the charts, and just be aware that if you see these in a trend, that it's possible you could get a trend reversal soon. Okay, but don't jump the gun. The next candle structure is going to be dojis, and there's really 3 different formations of the doji candle. And you can see those in the picture there. You have your gravestone doji, and the long leg doji, and dragonfly doji. These candles are pretty important candle structures. They are formed when the open and the close are the same or nearly the same. Okay, and the longer the shadows of the dojis, then the more significant that candle becomes. You'll see the gravestone doji, and it'll be formed in typically a lot of times it'll be formed in a downtrend. I've seen some of them formed in an uptrend, and they perform pretty well for a reversal candle. So you'll be able to see those on either side of the trend. And a long leg doji, it can happen anywhere on the chart or trend. So it's kind of one of them indecision type candles. And the dragonfly, it will typically occur in an uptrend. But like with the gravestone, I've seen them sometimes in a downtrend, but a lot of times they'll be in an upward trend, signaling a reversal. And with the dojis, it's important that this is one of them where you need to wait for a confirmation candle. Okay, and that will be very important. So, the next candle structure pattern that we're going to talk about is going to be the bullish engulfing. Okay, And this is a pretty major reversal pattern when it's completed in a downtrend. So typically what you're seeing is a bullish engulfing candle. It'll open lower than the previous day's close and closes higher than the previous day's open. Okay? So what that means essentially is that the green candle, which will be this one right here, its real body will completely engulf the previous day's red real body candle, which is right here. See how it's got the smaller body? Well, this bullish candle, it completely engulfed that body. Okay? So, you know, again, typically what this right here, the green candle, it must open at a lower price on that second day than it closed at on day one. Okay, it has to, or it's not going to be considered a bullish engulfing. All right, and on this next slide, let me bring it up. I have an example. Okay, so here we have, this is on SPY, it looks like, and so right here we got our downtrend, right? You see our trend channel, and we have our bearish candle. All right, so look at the next candle. What did we do? We gapped down. We opened up way down here whenever it closed way up here. Okay, so there we have our open lower than the previous day red candle right here. And what happened during that what is that, daily chart? Yeah, during that day we pushed all the way up here. Okay, all the way up there. This is your high and your close up here. That whole body of that candle engulfs this one. You see, that's a bullish sign, very bullish sign. And you know, looking at what happened after that, what happened after we got that reversal pattern? Boom, we retraced all the way back up here to whenever our downtrend started. You know, that would have been a good trade. And I mean, you could have done that just off of a candle pattern. And what you could have done, so what you could have done is, if you wanted to structure a trade off this pattern, what you could have done, you could have seen that, okay, you know, we have a bullish engulfing candle today on this daily chart. Let's wait for tomorrow and see if we can get our follow through. So what happened? What happened on the next day? You opened up back down here, which was a gap down. You pushed all the way down here right to where this opened up, but you held it. You held that support area. Obviously, that's an area of support, right? Because see that lower wick? You pushed all the way back up here and ended up closing right in the middle of that body. So what you could have done at the end of this day, you could have opened up a bullish trade, and you could have structured your trade by, you know, using a profit target of this area. See where there was some area of interest right there? So you could have taken profit right in here. Or I mean, or you could have, you know, if you was far enough out or whatever, you could have had this as a profit area to pull the trade off. And you could have used the stop loss below this low right here. That could have been your trade, and you would have made some pretty good money on that trade, right? So the next is the bearish engulfing, and obviously it's going to be somewhat of the same principle as the bullish engulfing, only its placement and price action are opposite. All right, it's a major reversal pattern, but it's formed at an uptrend, okay? And it will generally open higher than the previous day's close, and it'll close lower than the previous day's open. So this red candle will completely engulf the previous day's green real body. All right, can you see that on the picture there? See how it's kind of the same as the bullish engulfing, only its opposite colors. So a lot of times, and this kind of goes in for all of the candle structures that we'll talk about, okay? So in trading, a lot of times there's going to be a lot of choppy action, okay? There's going to be a lot of sideways action where you don't really have a trend. And we're going to talk about some other stuff in the next couple videos that will help you identify trends. But anyway, it'll just be sideways action, and you'll see a lot of these candlestick patterns form in that sideways action, okay? I don't want to say necessarily that they're void all the time during that atmosphere, but a lot of times you need to realize these candle structures at the proper time, okay? So a lot of these are trend reversal candles. So you need to find them in the trend, because you know, the reversal doesn't really mean anything if there is truly nothing to reverse, right? And I just want you guys to keep that in mind. That's important to understand, that you need to make sure that you use these candlesticks and their patterns in the proper atmosphere, I guess you could say. So here we have an example of the bearish engulfing pattern. Okay, so what do we have? We have our uptrend. See our uptrend channel? And then we have our bullish candle. We have our gap up. And then boom. Whoa, we have a huge bearish candle, right? Where the body, this bearish body, completely engulfs the bullish body. All right. So like we talked about on the bullish engulfing, if you wanted to structure a trade on this, okay, you know, you could wait for the next day and you could see where you okay, say you're gonna wait and see where we open up on the next day. If we open up at this close or lower, you're gonna open a bearish trade. Okay, and what's your stop loss gonna be? Well, you could use a stop loss of this candle's open. All right, which would be right here. It'd be a stop loss right in there. Or you could even use a stop loss of that candle's close right there. Okay. It's just how whatever your risk appetite is you know, what you would do in that situation. But that's an example of how you can structure trades around that. The next candlestick that we're going to talk about is called the hammer. And a lot of people get hammers confused, and you know, they'll call something a hammer, and really it's not at all. But it's a good reversal pattern, and it's comprised of only one candle at the bottom of a downtrend. Okay, and the way that this candle is formed is when the price trades significantly lower than its opening, but it rallies back within that same time period to close near its opening price. And one of the requirements of a hammer is that the lower wick is required to be at least twice the size of the real body. Okay, so you got to make sure that if you are calling it a hammer, it's got to be a hammer. A lot of people get them confused. The hammer will have a small real body and a long lower shadow. And a lot of times with the hammer candle, it is best, again, I'll probably say this for every one of them, but it's best to wait for a confirmation candle on the next time period. All right, so it's indicative of a potential reversal, but you just kind of need that follow through. Okay, and you know why is this bullish? Well, this is bullish because look, we traded way down here. Price came way down here. But what happened? The bulls came in and they started buying and they pushed the price way back up here. All right. I mean, that's pretty bullish, right? Here's an example of a hammer. So as you can see, like on the other examples, this is the daily chart. We have our downtrend. All right. So what happens right here? Look at this. We've kind of talked about these, right? Dojis and spinning tops. So right here, there's a spinning top. And what did we say about the spinning top? We said that the spinning top is showing that a trend reversal is imminent, right? Yeah, so that's right there. Look at that. Look what happened at the bottom of that downtrend. And we have a couple days of consolidation, and then boom, we have exhaustion to the downside, right? I mean, just lets loose to the downside. And look at that. It trades all the way down here. And the bulls come in and they buy it all up and push that price way back up here. All right. And what do we have the next day? We have a green candle. Okay. So, I mean, there's another trade opportunity right there. Another good reversal candle is called the hanging man. And as you can see, it is the exact same formation as the hammer. The only thing that's really different is that the hanging man will show up at the top of an uptrend. Okay, so it's signaling a reversal to the downside. And, you know, some people might ask, well, why would this indicate a bearish reversal after the price was pushed all the way back up here? Right? Because we just talked about that on the hammer. And so, yeah, the lower shadow, it does indicate that the bulls still have some control. All right, I'll admit that. But what else does it indicate? It indicates that the bears, which are the sellers, they've begun to step in. Okay? So this could be people who bought at the bottom of the trend and rode this uptrend all the way to this point of resistance, and they want to take some profit off the table, so that's going to start. And if you get a bearish candle the next day, then you have your confirmation. Okay? And then next we have the hanging man. And this one is, well, no, that's what we just talked about. So this is the hanging man that we just talked about. And there you can see that you have your uptrend. There's your trend line, okay? And, you know, boom, there's your hanging man right at the top. And what happens on the next day? You have your bearish candle. So you could open a trade after you get this confirmation. You can open a trade and be like, okay, I'm gonna use the high or the open of this candle right here as my stop loss, and I will use this area down here as my take profit area, because you know that is some form of support right there probably, and that'd be a good trade. It would be a real good trade. And those are some really good candle patterns. Like I said, it's very important to remember that you would really need that confirmation on the next day. Okay, that's very important. I forgot about adding a couple on here that are my favorites. So I'm gonna take a little snippet real quick over here of these, and we're gonna talk about them because I feel like they're worth mentioning, and I don't really want to stop this video after I'm 30 minutes in and redo another one. Alright, so I'm gonna bring this over real quick. So here, this is called a shooting star. Okay, and this is one of my favorite candlestick patterns, and it's a bearish reversal pattern, and it'll occur at the top of an uptrend. So it's formed when the open, low, and close are roughly the same price, and there's a long upper shadow that is typically twice the length of the body. Okay, and obviously the more bearish version will be when the low and the close are the same. And that's because the bears were able to reject the bulls' advance completely and also push the price lower. Alright? And your long upper shadow there, it shows that the market tested to find where the resistance and supply was located at. Okay? And it found it. So, let me bring that back here. So as you can see, we have our uptrend. Okay, we have our spinning top showing, hey, trend change is pretty imminent. Okay, and then we have our shooting star. Okay, and I would, if I was watching this chart right here, and I seen that shooting star form, at the end of the day, I would probably go ahead and take a short position. I would take that short position, but I would make sure that I kept a tight stop. Okay? See this area right here? See that right there? It's tested this area before. Now look. Look where this price opened up at. It opened up right at that area. Okay? See how it opened up right there? And we pushed up past it like we was going to break resistance. But then sellers stepped in and they pushed it all the way back down. Alright, so that's, I mean, that's, you know, that's a good sign right there. Especially after you have your spinning top on the previous day. So I would take a short position off that candle, and I would either use the open right here, or I would use the high right here as my stop loss, is what I would do. But they're a very good candle to use. And the next candle that we have is going to be, let me pull it up real quick over here. Alright, it's going to be your inverted hammer. And the inverted hammer, it will occur at in a downtrend, and it will typically signal a reversal to the upside. And for this pattern, it's very, very important to realize that it's a potential price trend change, okay? And that it is not a signal in and of itself to buy. Alright, so that's very important. If you opened a trade on this candle, you want to open it small to begin with, okay? And if you get your confirmation, then you can add to your position if you feel like it. It's visual formation. It's the same as a shooting star. And after a long downtrend, the formation of an inverted hammer is bullish because the price hesitated its move downward, and it increased significantly during the candle's time frame. And it just shows that the bulls are testing the power of the bears. Okay, so yeah, you know, it's it can be a very, very nice candle. So as you see here, you have your downward trend, you have your inverted hammer, you have a confirmation on the next day. Okay, now Yes. You see this candle right here? I mean, that's not really a bullish candle at all, right? No, I mean, that's an indecision candle. It's kind of got that spinning top look to it, you know, but that's fine. If you got this confirmation right here, you could open up a bullish trade, and you could use the low of this candle as your stop loss, or you could use the low of that candle as your stop loss. Okay? And so up here, typically I would use probably that as my take profit area. But if I was in this trade and I seen both these indecision candles right here followed by a hanging man type candle, I would probably take my profit off the table at the end of that day. That would still be a pretty good profit right there. I mean, that'd be a pretty good trade. But that's it on the candlesticks. I apologize for not having the last two added on to the slideshow there, so we kind of had to improvise, but that's what it's about, right? It is what it is. I hope that you learned something, and candlesticks are really good to use for trading. If you have any questions about certain formations or anything like that, then please don't hesitate to let me know, and I'll answer whatever questions that you have. Again, I hope you enjoyed this session. I hope you're learning a lot in our educational series, and I hope to see you for the next video. Thanks.